Historically, mortgage lenders have used tax documents for evaluating a loan, but what if that doesn't tell the whole story for you? What are your options? We're going to get into that next with Bill. Glad to have you on another Smart Mortgage Show. Ben George with Bill Litton, Regional President at Cross Country Mortgage. You can always get in touch. Text the word LEND to 21,000. Bill, today we're talking about another option out there for people outside of the norm, right? And talking about bank statement loans. So kind of set us up for why this discussion is important and kind of why you picked this topic out today.
So, spreading awareness for different options is really important because there are a lot of people that some lender somewhere said no to them. And maybe they don't have this option in their, portfolio, whereas we have a really strong portfolio product as a bank statements loan, which really gives people that are self-employed a lot more options.
And that's the key, right? Is having options. And that's, again, what a good mortgage lender will kind of run you through are all the options that are available to you, many of which you may not even be aware of, which is kind of why we discuss these things here on the show. So please subscribe to learn more as we move forward. But let's kind of get into this, Bill. What is the scenario where these bank statement loans would come into play?
So bank statement loans, we're seeing a lot of success with them in a few different areas. So if you're self-employed and a tax return tells the story of cash flows in relation to taxes and write-offs. And, sometimes what might be deemed to be a business that doesn't show enough cash flow on the tax return, if we look at the cash flows on the bank statements, so instead of using the tax returns to calculate income, we look at the last 12 months of the bank statements and we see what the cash flows look like. We can use those cash flows instead of the tax returns. It's a different formula and a different equation, but it provides for a lot more leniency, and we get a lot of people that won't qualify on tax returns that will qualify on the bank statements.
Okay. And is that something that you would I kind of identify with someone as you're going through the process, or is it something that they would maybe know about coming in typically?
Some people do know about it, but our decision tree leads us every time to first we want to look at your tax returns. And the reason we do that is you're going to get the best terms, best rate, lowest fees if we pre-approve you or approve you to buy a house with tax returns. But if there are, if the business is showing a loss on the tax returns or just not showing enough net income, the income after all the deductions, then in those cases, we would then ask the customer for their bank statements, and we would then see if we could help them with the bank statements. And so we know to ask for it, even if they don't know that the product even exists.
Okay. So you mentioned, to get the most favorable terms, you would obviously work off that tax return. So what do you have to sacrifice here, if anything, in terms of rate or your terms that you'll have with these bank statement loans?
So these non-QM products, when they first came out, the rates and fees were prohibitive. But now that they're so popular and they're so widely used and understood, and now we've got a record of the performance and the loans perform. And they didn't really know how these loans were going to perform before. And we just got out of the subprime crisis where loans were not performing. The difference being these, what we call non-QM in our world, it's a portfolio advantage product. The portfolio advantage product line, you must show an ability to repay the loan. Whereas with subprime lending, you did not need to show an ability. So the tax returns, W-2s, tax returns, pay stubs are the most common conventional way to do it. But there's validity in the bank statements. So, these loans, now that they've been kind of tried and true, the rates, if you have really good credit and you're putting 20 to 25% or more down, the rates are going to be 0.5% higher than a regular loan. Maybe you pay an extra 0.5 point, but not too far from the regular Fannie Mae, Freddie Mac product offering. So it's a tremendous opportunity without paying a lot for it. Now, if your credit's not as good, you can still get one of these loans. If you're not putting a lot of money down, you can still get one of these loans. But that's where we see the rates climb a little bit. And then really what we do is we're going to have the conversation of whether you're, great credit and a lot of money down, or you're paying a little higher rate. We're still, no matter what, always going to go through our process of understanding, well, how does that payment work in your budget? Does that work for you? And, how are you going to file your tax returns next year? Because we might have an opportunity to refinance into a standard Fannie Mae, Freddie Mac loan.
Yeah, that's what I was going to ask you. So it doesn't hinder what the future could hold for you, right? You still have that ability potentially to refinance if maybe some of the financial statements change, rates drop, obviously, another reason to do that, but you would have that option on the table.
Exactly. Yeah. So part of the mortgage planning process is sometimes we've helped somebody get into a home with a higher than market rate, but we know that based on the trajectory of their business, we can go back to a regular conventional loan in a year. And then even if the market doesn't change, just by virtue of that different product, they might have an opportunity to refi.
Anything else about the process with these bank statement loans is different that somebody might need to be aware of?
One thing is, if you're planning for a bank statements loan, what they don't like to see on those bank statements are any like NSF charges, non-sufficient funds where you overdrew the account. Those can be very hurtful to this type of process. Also trying to just have one business bank account that all of the monies go into. If you've got 4 different business bank accounts and that you randomly put money into all 4 of them, it's going to make the process a whole lot harder.
Is there anything else then to kind of wrap this up that you should know about, or just anything else you can do to maybe put you in a better position if you are, maybe someone that would maybe consider a bank statement loan?
Well, always been, just as we have mentioned with the rates and the fees, that the better the credit score, the more leniency you're going to have, the higher that you can go debt ratio wise, the higher you can go LTV wise if you want to put less money down. So credit still plays an important part in these loans. So anything you can do to maximize your credit and your credit score is still going to be very helpful.
Okay, so not a whole lot changes then as you approach that process and buying that home, but maybe this is a different way to qualify for it. So interesting there. But again, want to learn more, please reach out. You can always text Lynn to 21,000. Begin kind of that process. And you talked about kind of working through that tree to get the answer tree to get to this point, Bill. Kind of take us through kind of where that begins. You have to work through the whole process. For someone that is interested in kind of beginning that process and maybe unsure about what they qualify for, what they don't, kind of where does that all begin?
Well, the very beginning of it is just calling. We're going to have a conversation over the phone to start. It's probably going to be 10, 15 minutes. And I want to learn all about what your goals are, where you are today, where you're looking to get to, how much money you have saved. Just really start to understand the big picture to start. And then the second step would be you'd provide us with some documents. Once we get the documents, we'll review them, pre-approve you. And then really the third step, Ben, this is so important. The third step is we're going to review the pre-approval, the loan estimate, all the important details, because there's a lot, the devil's in the details. There's a lot of details. We want to make sure you know all of them going forward.
All right. Cross Country Mortgage can help you out with that. I know Bill, so we talked about on this channel quite a bit, is working to find the best option for you, taking into account your full financial picture, right? And that's part of what those conversations will help identify. But one of those options might be these bank statement loans. So if you want to learn more, please don't hesitate to get in touch. You can also find everything online at smartmortgageshow.com. Bill, appreciate the time as always. Talk again soon.
Thanks so much.
This program is for informational purposes only. Please consult a qualified professional before taking any action. Bill Litton is a loan advisor and regional president with Cross Country Mortgage, NMLS number 147060.